Hello and welcome to Livewire's Buy, Hold, Sell. I'm Selby and today we're taking a deep dive into the spicy end of the market. And by that I mean small and micro caps. To learn how you can find the next great compounder, maybe even a 10-bagger, we're joined by Andrew Peros from Ausbil and David Keelan from Ellerston. Andrew, I'm going to start with you today. We've obviously had quite a few awesome 10-baggers on the ASX, like Afterpay, Fortescue, REA Group, CSL and Telix, to name a few. There's obviously been more. Is there anything that they all have in common?
Yeah, well, I'll start by saying a few others that have been notable 10-baggers, Hub24, Life360 and Pro Medicus, all very well-known names in the small and micro cap space, have graduated to become successful small and mid caps. I would say the most common theme that I've noticed is that they're pioneers or disruptors in their field of business. Afterpay, for example, a real pioneer in that buy now, pay later space. REA Group taking advertising into the digital realm. And then Life360 really in that family safety and family tracking part of the market. It's a new category and they've been quite successful on that front. A lot of them are founder-led, a key theme in small and micro cap space, scalable business models, taking existing technology and really scaling it out into the global market.
Do you agree? Do they have to be first mover businesses as well?
We think, first of all, there's going to be a large TAM. There's not a large TAM, there's no point. Generally, they have a twist on the traditional model, so therefore they're easier to accept. So not fully disrupting, but having a different edge on what's out there already, and a strong call to action.
What's the secret to identifying long-term compounders then? Are there any factors that you think are really important?
In our space, we are back to jockey, so it's got to be a really strong founder, owner of a business, someone that is very singular focused. Generally in the small end of the market, these companies have kind of one vertical. They do one thing well. They're not a conglomerate. They've got one stream and they've got to be really focused on this. So strong founder-led, strong focused, and understand capital management, when and where to use it.
Okay, over to you. Which factors are important to you, Andrew?
Well, I certainly agree with David. Founder-led businesses have a history of delivering through time. We have approximately 40% of our portfolio in founder-led businesses, so we really do back the man. But one thing that we do at Ausbil, we screen out the unprofitable and any liquid names first. They're the concept stocks, the stocks where you can't really assess future earnings, there's perhaps no prospect of profitability. So once we screen those out, we look for companies that are on that journey to profitability and hopefully capture them early in their life cycle.
So there's no zombies in your portfolio?
Absolutely not.
What are some red flags investors should be aware of other than profitless companies?
Oh, look, red flags are very easy to see in hindsight, but for me, the ultimate red flag is insider selling. It's not always an issue if an insider is selling down a small portion of their shareholding, but if they're selling a large proportion of their shares in one hit, you need to ask questions. For us, it's a red flag. And I guess the greatest example I can give you, A2 Milk, after the August result in 2020, you had the CEO, the chairman, the head of APAC and the head of marketing all selling a substantial chunk of their shareholding for tax purposes. But what transpired after that was 4 consecutive profit downgrades over a period of 9 months. So that's clearly the biggest red flag for us.
How do you feel about the Life360 sell down that we've seen recently?
Yeah, it was well flagged. And look, I mean, Chris Hulls is a very energised and motivated founder. He still has plenty of skin in the game. We did get notice of a potential sell down coming 12 months ago, so it shouldn't come as a surprise to investors. But for what it's worth, the volatility in the share price we have seen as a buying opportunity, so it's been great for us.
Okay, over to you, David. What red flags do you think investors should be aware of when investing in micro-cap stocks?
I agree with Andrew. Insider selling is smart money, insider buying is dumb money. Our team, Ellerston, Ellerston's an active manager. We like to travel a third of the year. We love speaking to management, industry contacts. We're looking for a change in narrative. When things change and we can't articulate why, that's a red flag to us.
Andrew said before that he doesn't like to invest in profitless companies. Do you agree? Do you invest in companies without profits?
We invest in companies that will have negative free cash flow. Our view is that at this end of the market, it's part of our job. We spend a lot of time with these companies trying to understand their unit economics. We look to offshore peers to see how they articulate it. Aussie companies are a bit more immature in how they present sometimes. So we'll spend time with management, spend time with the CFO and really try and understand what return they're going to get back in their invested capital.
Is the profitless company rule hard and fast, or do you sometimes invest in companies without profits?
Yeah, we're not punitive with our thinking around profitless companies. We do make exceptions. I mean, how else would we have invested in Afterpay and Life360 at the early part of their journey? But generally, we want to see that path to profitability within a 12-month period. As a minimum, we want to see cash flow break even, just so we know that they're self-funding, they can fund their growth sustainably. So that's a way for us to de-risk the proposition.
Okay, we asked our guests to bring along a stock that they believe could become the ASX's next 10-bagger. David, what have you brought for us?
So I'm going to name one that's just downgraded. We've got a small position in Veeam. We think Veeam has got the potential to be the next PWR. Veeam makes the core business, makes gyros which stabilize ships and boats, and they're growing into propellers, shaft lines, and into defense. Market got really ahead of themselves over the last 12 months. Stock went to $2, is now around $1.20. It will drift for a while the market recalibrates its expectations, but we think over the next 3 to 5 years, it's got amazing upside.
Okay, over to you, Andrew. Which stock do you think will be the next ASX 10-bagger?
Today I'm going to name a company called Catapult, ticker is CAT, operates in the world of sports analytics and data aggregation. Now the starting point from my perspective with CAT is sport is very big business. Some of the largest sporting teams in the world are worth tens of billions of dollars. There are hundreds of billions of dollars spent on advertising, TV rights and affiliate programs. So there's a huge share of wallet that these sports teams are targeting. Now the opportunity for CAT is to leverage their products, become part of the fabric for these elite sport teams, so it can give them the edge when it comes to competition and winning competitions. As I said, it's big business, there's big money involved, and the price of a CAT product is only a very small proportion of the overall sport spend. So I can see a path for CAT to generate roughly $800 to $900 million US over the next 5 to 10 years. You put that on a reasonable EV to sales multiple, at a discount to some of the other SaaS companies in the market, and you can easily see this being a 10-bagger, if not a 15-bagger.
Wow, okay, what an awesome way to end the episode. I hope you enjoyed that as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube and podcast channels. We're adding so much great content just like this every single week.